What if the roots of modern Forex trading didn't sprout from glass-walled skyscrapers, but from the dust of ancient African marketplaces where gold, salt, and stories collided? This is how Forex began in Africa, a story of survival, not speculation. Forget sterile charts and jargon. This is about how a continent transformed systemic collapse into a superpower. Imagine this. 1,000 years ago, merchants in Timbuktu bartered gold for salt under a relentless sun. No brokers, no algorithms, just raw trust and hunger. Fast forward to the 20th century. While colonial currencies sought to bind nations, underground markets flourish in the shadows, birthing Africa's first unofficial trading floors. Now, a digital uprising is underway. Young traders in Accra are outmaneuvering hedge funds with modest accounts, and market women in Lagos are arbitraging naira rates faster than any Bloomberg terminal could blink. This isn't luck, it's legacy. And yes, this narrative comes from an AI. Why? Because the visionary behind this experience is deep in the trenches, deciphering market trends, fine-tuning strategies, and turning data into compelling insights, leaving no room for a sugar-coated tale. Here's the untold twist. Africa's Forex boom wasn't ignited by elites. It was sparked by the overlooked. The street vendor swapping dollars at a border, the student dissecting GBP ZAR trends on a cracked phone, the millions who turned volatility into a tool of resistance. Colonialism may have written the first chapter, but we're busy scripting its final pages. Warning, this isn't a feel-good history lesson. It's a raw, blood-and-guts blueprint. Every trade you execute isn't just about chasing pips. It's about reviving a 1,000-year-old game of risk and rebellion. The story of currency begins not in boardrooms, but in the dust of ancient marketplaces. Long before coins bore the faces of kings, Africa's traders mastered the art of value exchange. In the Sahara, caravans moved gold and salt along routes that doubled as early economic networks. The Mali Empire is mythical. A gold coin celebrated across continents proved Africa's understanding of standardized value centuries before Europe's Renaissance. When Rome minted its denarius, it borrowed a truth Africa already knew. Trust in currency could bind empires. Fast forward to the 19th century, when colonial powers imposed foreign coins and banknotes, fracturing indigenous systems. Yet, even then, black markets thrived, shadow economies where Africans traded currencies under oppressive regimes, unknowingly rehearsing for a future financial revolution. Bretton Woods and the collapse of the gold standard didn't introduce Africa to Forex. They merely handed it a new rulebook. By the 1970s, floating exchange rates turned the global market into a storm. Africa, no stranger to volatility, began to stay. The early 2000s found Africa at a crossroads. Stock markets in Johannesburg and Nairobi catered to the elite, while the masses navigated informal economies. Forex was a foreign concept, until South Africa's townships erupted. By 2009, grassroots marketers, armed with flip phones and relentless ambition, began pitching Forex as liberation. Their methods were unpolished, their promises sometimes reckless, but their impact was seismic. In Soweto, a teenager could now trade USD or ZAR from a borrowed smartphone. In Lagos, market women debated exchange rates between sales. Critics dismissed it as a fad, but the genie was out of the bottle. This wasn't mere speculation. It was a quiet rebellion against economic exclusion. The tools were crude, the risks high, but for the first time, the power to profit from global shift lay in the hands of those once deemed powerless. Africa's Forex surge cannot be divorced from its cultural spine. The continent's informal sector, a $1 trillion ecosystem of street vendors, artisans, and small traders, operates on principles eerily similar to Forex: rapid adaptation, risk assessment, and liquidity management. When Forex arrived, it didn't disrupt the hustle, it weaponized it. WhatsApp groups became digital trading pits, where strategies were dissected with the urgency of wartime code breakers. In Nairobi, tech-savvy youth backtested strategies against Kenya's election cycles. In Accra, traders correlated cocoa harvest reports with GBP or GHS trends. This wasn't imitation, it was innovation. Africa's traders reframed volatility not as a threat, but as a dialect they'd spoken for generations. The market's chaos mirrored their reality, and they navigated both with the same grit. Behind every trading boom lie pioneers who turned chaos into curriculum. South Africa's Grant Jones, a veteran trader, distilled complex theories into digestible truths for township rookies. In Nigeria, mentors like Ray Foy emerged, figures who blended academic rigor with street-tested tactics. Foy's rise, from bartering SIM cards to decoding Fibonacci retracements, became folklore. These mentors did more than teach, they demystified. They translated concepts like leverage and liquidity into analogies rooted in African life. Margin is like borrowing your neighbor's kettle, useful, but handle with care. Their lessons spread through YouTube tutorials, pirated ebooks, and midnight Zoom calls, stitching together a patchwork education system where formal institutions had failed. The mid-2010s brought a darker tide. Social media influencers, draped in rented luxury, peddled Forex as a get-rich-quick talisman. Instagram feeds overflowed with Lamborghinis and fake payout slips, luring desperate dreamers. Novices leveraged savings into oblivion, mistaking luck for skill. The fallout was brutal. In Kenya, regulators cracked down on unlicensed brokers. In South Africa, disillusioned traders dubbed Forex a scam. Yet, amid the wreckage, a core of disciplined traders survived. They'd learned the hard way. Forex rewards study, not swagger. The market's indifference to struggle became a perverse teacher. Those who listened adapted, trading smaller lots, journaling losses, treating the screen not as a casino but a classroom. Africa's greatest Forex innovation wasn't a strategy, it was solidarity. In Johannesburg, traders clustered in coffee shops, their laptops forming a mosaic of Bloomberg Green and MT4 Blue. In Lagos, Telegram groups buzzed with real-time alerts. CBN governor speech at 2 p.m. Expect Naira swings. These tribes shared more than tips, they shared guardrails. A rookie's reckless trade became a cautionary tale. A veteran's windfall funded another's margin. Kenya's tech hubs birthed algo trading collectives, while Ghana's traders fused crypto and Forex into hybrid portfolios. This collectivism countered isolation, a scourge of modern trading. The tribes proved that Africa's strength lies not in individual genius, but in communal genius, a lesson etched into continent bones long before Forex existed. The future of African Forex is a paradox of promise and peril. With 70% of the population under 30 and smartphone penetration soaring, the potential is tectonic. Yet, pitfalls remain, regulatory gaps, predatory brokers, and a lingering stigma. The solution lies in synthesis, blending tradition with technology. Imagine AI-powered platforms that teach trading through proverbs or blockchain systems that mirror the trust-based networks of ancient caravans. The next frontier isn't just profit, it's policy. African traders must demand seats at global tables, lobbying for frameworks that protect without stifling. The goal? To ensure the market's waves don't drown the hopeful, but carry them to shores their ancestors never imagined. To those grinding in silence, the night trader in Kibera sketching charts by dim light, the mother in Kamazi juggling pips and parenthood, the student in Harare converting textbook theory into live trades, this is your legacy. Africa's Forex story is not a footnote in finance history. It is a manifesto, a declaration that the tools of global power can be seized, studied, and bent to the will of those once excluded. The screens may flicker, the markets may roar. But remember, you are heirs to a 1,000-year-old tradition of adaptation. The ancestors traded gold. You trade time. Both are currencies of survival.